So in terms of experience, I would definitely say that the experience has been good and it continues to be good. Primarily the reason why I continue to remain involved deeply and invest along with IPV. I have so far invested in a range of different industries across multiple companies, and I've over a period of 3 years I've kind of built out a portfolio which is well diversified in terms of startups as a asset class with IPV, right? And the experience has always been good because one, what I felt is the level of due diligence which is carried out by IPV before any startup is recommended for investing is pretty solid. I have myself been involved in a couple of due diligences lightly, and I've observed that the team really works hard to ensure that major aspects in terms of governance, in terms of the traction, all that is well covered, right? And I've generally sensed that about 30 to 35% of my total invested startups come back to me for exit opportunities at different points in time, right? Ranging between 3 to 6x is what I've seen so far. Though I can't say that I've taken all those opportunities, because generally my thesis is to remain invested for a long period of time until something changes in terms of facts and circumstances. And with that, I would say IPV has been helpful, not only in bringing these startups for investment, ensuring that an appropriate level of due diligence is carried out, results are presented, and as and when an exit is available, a fairly good deal is cut out by IPV, is what I've observed. So it's a full circle good experience, I would say. So in all honesty, I never looked at startups as an asset class, right? I got involved with IPV about 3.5 years back, and I still remember those initial 1 or 2 startup calls that I attended, and everything was seeming quite hazy. There was I didn't have much clarity as to how does one evaluate a startup, whether that's something which a particular startup is something which gels with my investment thesis, so on and so forth. Okay. But as I continue to attend the Saturday morning meetings and calls, over a period of time, I started connecting the dots, and I would say a certain level of experience started getting assimilated, through which I found myself to be able to make decisions. Right now, from there I've come a long way. In my portfolio, I have about close to 14-15 companies now, right? And the entire journey has been filled with learnings every day, right? There has been instances where I have had interactions with the founders of certain of these startups to clarify a certain aspect that I'm wanting to clarify, right? I've kind of built friendly relationships with co-investors within the IPV portfolio, IPV group, discussing and brainstorming on opportunities. And over a period of time, I've actually gotten to realize that startups is also truly an asset class to be invested in. And now I ensure that I follow a good balanced approach of a certain percentage allocation of my investments to be made into startups, thereby being able to improve my overall return on investment percentage, comprising all the other standard usual asset classes and their respective returns, right? Now, on the question of whether I will be investing with IPV again, the answer is absolutely yes. IPV happens to be my first go-to platform for investments into startups, given the past experiences, success, and the kind of network that it offers in terms of building relationships with founders, co-investors, so on and so forth. So the first exit that I actually took, right, was probably 1.5 years into my journey, right? It was a company called Torch, a good solid return of about 3.5x over a period of 11 months of investment, which is pretty phenomenal that way. Now, As I kind of alluded to before, when I invest, generally my objective is to invest for a relatively longer period of time. So I'm not someone who's actively looking for exit opportunities. Said that, there are multiple of exit opportunities which came my way, on from my portfolio of startups within IPV, which I've not taken because I see these startups growing and going into further rounds of investment. There are about four of these startups who have gone ahead and raised Series A funding, and I continue to remain invested, because I have a longer term view. In fact, I invest in follow-on rounds as well. When it comes to the single exit which I actually took, and how did that help me? Obviously it was not something which helped in a liquidity requirement per se, but it did help in some way because I was eyeing 2 or 3 startups which I wanted to invest in at that point in time. And because this exit came in and I made good returns out of it, what I did is I increased my allocation for investment into the other startups which I invested in. So to that extent, yeah, I mean, we can say it did help in increasing the liquidity, as does any good investment that way.